Hey, what is up you guys, it's Kurt here. Did we actually cancel the bear market? What just happened? I mean, in the last 2 or 3 weeks, since the outbreak actually, the market has been going steadily down and people are panicking that we're heading into a recession. And in the last 4 days of this week, actually when the market was open, what happened was the market went up. I mean, it skyrocketed according to some media saying that the Dow is record-breaking, going up like X number of percent since 1974. So you may be wondering, did we actually miss the market bottom? If you're trying to time the market bottom to go into the market, did we actually miss that? So this is all we're going to talk about today, and I'm going to try to explain, at least from my perspective, why the market went up. So stay tuned right after the jump. Alright, so we witnessed a huge recovery, so to speak, from the market. All major indices went up, some even made history. I mean, the sharpest recovery ever for the Dow Jones since 1974. And I'm thinking, how is this even possible? We are all expecting the market to go down further due to the negative news. So what I thought about today's episode is, I wanted to structure in a way where we can look at the news, but I'm going to try to read between the lines here. I'm going to try to give you a little bit of my thinking of what you see beyond those headlines. So I'm going to try to draw a mind map based on that information, and ultimately by the end of the video I'm going to give you my opinion on what to do. And I want to be very clear, by the way, I'm not a financial advisor, nor can I predict the future. So I'm just going to give you my personal opinion as an engineer, the way I'm thinking about the situation. So without any further ado, let's look at the news and the economic situation that we're facing. So, if we read the news, you can see all kinds of titles and headings that, things are bad, and I'm not trying to be Mr. Obvious here, obviously things are bad, but if you read information from reputable sources, and I'm pulling up here the PBS site, if we're heading for something like the 1930s, everybody that's telling us that we're going to be in lockdown for a couple of weeks and then the economy is going to pick up, that's probably not true. I mean, it's really hard to believe that that is the case. Now, looking at CNN, you see titles which say that disastrous jobs data sharpens as the dilemma over closed economy. So should we close the economy or should we not? And what are we looking at jobless claims? At the moment, we got 16 million people without jobs in the United States, and that number is growing rapidly. I think the situation is pretty similar in Europe and the rest of the world. At the same time, what are we seeing on other sides? JP Morgan and Chase and all the other banks are trying to put a forward statement on what is their expectation on the returns. People are saying, okay, we could reach a 14% unemployment. That's pretty high. They're saying that the recovery will take months, if not years, right? If we look at what the Federal Reserve is doing, they're basically saying we're going to give you a 2.3 trillion stimulus that's going to help the business. We're going to cover everything with that 2.3 stimulus, but is that really true? I mean, who is this money going to go to actually? Not everybody's going to be able to qualify for this. And in this article, they kind of show the plan of what is the plan to actually distribute this money. And it's not as clear cut because some companies will be able to get it. For example, if your business is with up to 10,000 employees, you may be able to get some money, but not all businesses are going to get it. In fact, if you read some of the alternative media channels, you'll see even titles which are saying extremely alarming that the coronavirus stimulus law allows the Fed to hold secret meetings on corporate bailouts. Basically, there is a question of transparency. So, of course, the Fed is going to try to help, but if there is lack of transparency, there is a great opportunity for some of the corporations to benefit, and that could be, let's say, not as clear and as legal as it should be. And the fact that there is not going to be any transparency, that's actually pretty sad, because this is not what capitalism is all about, I think. And paired with, everything that is happening, I'm going to try to actually now move into my mind map, because I really want to understand, what are we dealing with here? How can we actually understand why the market went up this week? And it really puzzles me, but I'm going to try to really explain this to you the way I understand it, all right? Let me show you the mind map that I already have as a draft here. First, we've got a health crisis. By the way, this is the end state that we want to arrive, but let me kind of go step by step here. So first of all, we want to answer the question why the market went up, or we want to explain it at least for ourselves, right? So first of all, we've got a health situation, obviously. So the illness is still around, it's not resolved. We have no vaccine yet, right? And we're looking at vaccine maybe in the next year and a half, 2 years. That's a fact. I mean, there's no way to, fast forward through that. Also looking at more and more people getting sick, that's inevitable. And the thing is, because the only way for the government to kind of reduce the risk or flatten the curve is to impose these measures, even though now we're saying it's going to be for the next 15 days up until end of April, beginning of May, the reality is until the outbreak is solved, we're all going to have some sort of measures. Maybe not as strict, but there are going to be some measures. And what the other issue is that evolves around this kind of health area still is that we're still having a shortage of medical supplies. I mean, regardless what we see on the briefings that, okay, X number of masks, X number of whatever medical supplies is still a huge shortage. And the reality is we also have a shortage of medical staff. If not just yet, it's probably just about to happen because the curve hasn't been flattening yet. And pair that with some of the kind of economic news that we just discussed, right? So what is happening in the economy? On the economy front, the IMF is declaring a recession, a global recession. We're looking at growth of unemployment here, right? So we've got 16 million in the States, but I can tell you the number is just as big in other countries in the rest of the world. We've got also a recovery that is likely to happen, but it's not going to be overnight. It's likely it's going to be very, very slow. So it's not going to happen overnight, right? And also we see that the Fed is actually willing to do whatever it takes to save the businesses, right? And let's not even speculate that who's going to get the money or who's not going to get the money. By the way, there is a funny video about Jay Powell printing money, and I know it's comical, it's hilarious in my opinion, but actually this could lead into a hyperinflation. So the more money the Fed prints, they may be able to patch things up, but our money is worth less. And we may be in a situation sooner than later that we're in a hyperinflation, and nobody benefits from hyperinflation. We also have a oil war. All right, this is not also to be disregarded because we have a huge supply, we have overabundance of oil, and yes, measures are being taken to reduce the production, agreements between the countries producing the oil, whatever, but the reality is there is an issue with oil. So now that being said, what does that mean? Why did the market go up? I mean, does that explain why the market went up? Does it make sense for the market to go up? We've got a huge set of health issues. We've got quite a bit of economic issues, regardless of the measures or not. So I was thinking, well, maybe we need to look at, what are the positives? Some of the measures that are being taken, what are the positives? What can be actually contributing to that positive sentiment for the market, so that's the reason the market is going up. And this is kind of what I was able to come up with. The positives are Dow is having the greatest week. Okay, that's fine. But then the Fed stimulus. The Fed is willing to do whatever it takes. Obviously, there is attention to the business. There is attention to save the small business, which drives the country's economy, as we know. On the health side, there may be treatments that we discover. So at the moment, we're experimenting with different drugs. So that will be a positive thing. That will be what could drive the market up. Also, vaccine. Obviously, the hope is that we're going to get a vaccine in the next a year or two. And when that happens, for sure, the market will go up. We're looking also at businesses, the fact that they were doing really well before the outbreak. And so we don't have businesses struggling, so to speak, Yes, there's a lot of debt, but let's assume that the businesses were doing really well before the outbreak. So if the outbreak is tamed or reduced, businesses will be able to continue to function just as well. Maybe they need to adapt to the new way of working, a lot of working from home and telecommute, etc. But in certain industries, that's already been the standard. So having that picture in mind, I really wanted to discuss, then let's look at, what can we do then? What is the right strategy? Keeping this in perspective, this is how I think about it. So if we look at what to do, I was able to come up with a few things, but before we jump into this branch to the right, I really want to stress that at the moment, actually the best thing to do for us is to really focus on the things that we can control. And the things that we can control are things like our expenses. You've seen a lot of my videos on personal finance, how to live within your means, always save from your paychecks. This is where this is coming in really handy. Also the emergency fund that I've been talking about in pretty much all my videos. This is where your emergency fund is supposed to cover you if unfortunately you are one of the people that actually get fired from your job. So this should help. And if you're still employed, that's great news because you have the great opportunity to bump up your emergency fund. If you only have, let's say, 3 or 4 months of emergency money, maybe it's a good opportunity to bump it up to 6 to 9 months worth of your expenses, right? I think that's a sound argument. Then the other thing we can control also is risk. And the way we control risk in an investment portfolio is diversifying as much as possible globally. And then the other thing we can control is the actions. The actions I'm responsible for are basically how I invest, if I continue to invest, or rather I prefer to double down on my emergency fund, what I do on a daily basis that I don't get into debt. If there is a chance I get fired, then I prepare mentally and also look for ways to maybe learn a new skill or be more marketable should I need to look for a new job. Those are the kinds of things I can control. Now, having said that, what do we do? What is the right thing to address why the market went up, or if the market is gonna go down and we're gonna reach a real bottom in the next upcoming days or weeks. So I think that what we can actually do is go with the assumption that nobody can predict what the market will do, or that no one knows what will happen with the virus situation in general. Medical doctors are puzzled, experts are puzzled, financial experts don't know. Everybody is speculating. People are saying the market is tanking, other people are saying we're in a V-shaped recovery. You don't know who is right, and at this point it's pretty much like toss of a coin. We don't know who is right. And we don't have to. This is what I'm trying to arrive at. And we also need to accept the fact that the market is unpredictable. That's the reality. That's why I always say the market is unpredictable, and there's also a lot of research done. If you've seen some of my other videos, and I'll reference those in the upper right here in the info cards. But the market is unpredictable. So accepting that, this would also allow us to continue to invest in a reasonable manner where we're not trying to time the market. Also, the fact that the recovery will not be overnight. We know that. I think that's the reality. We're not going to recover in the next 2 weeks. So knowing that the market will not recover overnight, then we need to be aware what is the right way to invest, assuming a long-term process of recovery. And this is why I always talk about investing, not trading. So if you're investing for the long term, you need to be investing the money that is set aside for investment and that you will not need for the next 5, 10, 15, 20 years. So if you don't need that money for at least 5 years, then by that time, for sure, we would have recovered. I mean, even if we're in a Great Depression scenario like 1930s, we're looking at 5 to 10 years where things are going to be bad, but ultimately we still recover. So dollar cost averaging into the bear market. So we don't know when the market is going to tank. We don't know when it's going to be the bottom. As we saw the last 4 days, it went up. If we assume the market will be volatile in the next days, weeks, months, years, the best thing that we can actually do if we're able to continue investing is to dollar cost average into the bear market or into a bull market. It doesn't matter. And lastly, we want to avoid being biased based on recent performance. And recent performance could be oftentimes when you try to pick out a fund or ETF. What is the performance in the last X number of months or year to date or the last year? The global economy as a whole will do well. So overall, we want to avoid the recency bias and invest with the long-term perspective. Again, stick to our investment plan. So this is the big picture, guys. At least this is how I think about the current events. Obviously, again, I can't predict the market. I don't know what's going to happen. We've got the health issues, the economy issues and measures. Some could be positive measures and they would have a positive effect, obviously, but we don't know when. And the best thing to do, in my opinion, is stick to the things that we can control, diversify, manage our risk, invest globally, dollar cost average. This is the best thing we can do as long-term investors. And by the way, if you're new to my channel, make sure you head over to my page. I do have a dedicated playlist for investing, personal finance. If you go into the investing playlist, the first video is investing policy statement, how to create an investing policy and what is the right way to actually start investing. So thanks very much for watching, guys. If you enjoyed this video, make sure to destroy the like button. As you know, this is the only way other people will find this video. So if you found it helpful, you can let other people know that this video is useful by hitting the like button. And also you can share the link with a friend or family member, anybody that's going to find it useful. If it's your first time landing on my channel, make sure to subscribe for more videos on investing and personal finance. And that is all for me today, guys. I hope you have a wonderful day. I hope you're healthy and you stay healthy. I hope you stay home and do your part with the social distancing, because that's the best thing we can do at the moment. And until next time, keep investing and stay the course.